we are very happy how we came through this pandemic, because we did that lots better than many of our competitors. That has to do with us being a very diversified company. And you have provided the numbers a second ago. You know, we were above 4 billion at the year end and approximately 706 million euros on adjusted EBITDA. We had a strong decline in the second quarter, directly when COVID-19 started. And we had this strong recovery. And that's what we also expect, by the way, for 2021, a V-shaped recovery when our shops will open again. And that's the reason why, especially in the fourth quarter, our advertisers really came back to the market. And we know already, even if the first quarter will be difficult, because, you know, we have a very competitive situation from last year. As you all know, COVID-19 started mid of March. We totally know that, you know, this will be difficult in the first quarter, but directly after the lockdown will stop, you know, and we get better situation. Shops are open. We expect the similar development as we could see in the third quarter last year.
Can I ask you about your very exciting dating app, given we've just seen the success of Bumble, the 2.2 billion IPO went much better than many had anticipated. I know you are looking to list Parship Meet around 2022. The last reason you cited because you wanted a full year of comparison of results to present to the market. But you've got this window of opportunity. Should you just take the plunge?
Yeah, first of all, we are very happy that our dating business is as strong. As you know, we combined last year the Meet Group to our Parship Meet Group, and now we have one of the best assets in the industry. And yes, this is our announcement, you know, that we are preparing currently the company for the IPO in the year 2022. But for sure, we look on the market. But overall, I would say, you know, this is our timeline, because we have a lot of things to do, as you can imagine. And this asset is for us key in our strategy, because in Prosiebensat.1, we set up the company in 3 very synergetic segments, you know, which is dating, entertainment, and commerce and ventures. And we need the synergies. So for us, dating is key. So we are not looking for a short-time IPO. We are looking long-term on that asset.
On Join, actually, and this most popular clips, including Bunte.de Royals, picture of Her Majesty the Queen. Look, how far are you from where you want to be in the battle against Netflix? We talked about Max about this many years ago as well, about how you think you've got the right product to take them on as well. Just explain where you think you are and where you want to be.
So first of all, you always have to look, when we talk about Join, what is the market we are in. So we are a German speaking company. We are in Germany, Austria, and Switzerland. That's our target also for Join. We go a different way. Our strategy is, you know, on the AVOD layer to be more successful, because our strong belief, knowing the Germans, I'm also German, we are very, very cost sensitive. So, you know, for sure, we will have some winners in the subscription-based business in our industry. But on the other side, with the setting, Join to position as an AVOD layer in first step, and also having only a small piece in subscription-based business, we would never call ourselves as a competitor to Netflix.
Production costs, customer acquisition costs as well. Can you keep those under control in what has to be a high-spend era?
Yeah, as I said, you know, Join for us is something, you know, which is not as expensive as with others, due to the fact that we are using what we have on the broadcasting area and then put that on TV, and vice versa. So we will play the windowing game, you know, between digital and normal linear TV. That's important. And on the other side, when you look on our overall content costs, we already announced today that we will keep that on approximately €1 billion. This is a good number. We were one of the only broadcasters during the last year in Europe who didn't cut back the costs in our content. And that played out, because at the end of the day, when you've seen what we developed and what we reached, and I also would like to remember what we reached in the last quarter, we had revenue growth of 11%. and profit growth on adjusted EBITDA of 12%. And the basis was that we had a great program in place and really worked out, and that really worked out for our advertising customers. And that's how we want to play also in 2021.